The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome. Andrew Peters here with our next webinar on developing profitable Forex strategies. We'll do one this week and then I'll take a week's break and then we'll finish on the 29th of August. Okay, let's begin as usual by showing our risk warning and disclaimer. If you haven't read this before, please pause the video. If you're watching it, if you are live, then I think you will have seen this one before. So I say trade responsibly and enjoy the benefits. And again, for anyone who's new, the concept in this webinar series is that we take a trading strategy and we look at it and understand the logic of it. And that is something that a lot of people will do, and there are a lot of webinars that will show you that. What we do differently on this webinar series is that we take those strategies and we load them onto the order trader so that we can backtest and analyze and optimize and see whether once we have those optimized settings, we could still trade manually if we wanted to, but we can then also obviously trade with the order trader, which means we can trade for the 24 hours of the day, 5 days of the week, rather than the times that we're awake or available to be at our computer. And so it's the use of the order trader that's the prime aspect of this webinar series, but otherwise it's just dealing with strategies, moving averages, RSI and MACD, and trade management issues that are the hallmark of every trading action that we take. A little bit small, the first few points, but this is what we have covered over the past few weeks. And I'm not going to belabor that because I have each of the past webinars. But if you are watching the recording, you can pause it to read it more carefully. What we did last week was to simulate a strategy from Russ Horn called the Forex Power Pro that was available on the net for us. It uses moving averages and RSI in a particular way. And what I finished up with last week was to show that the strategy as it was over a three-year period wasn't profitable. In fact, it loses money. But if we added a higher time frame filter, we could actually start to make it become profitable. And I've had a few questions, including one is to from one of our audience as to whether the order trader can add higher time frame filters, and the answer is yes, it can. And perhaps if I might show you that at this point. So we move on to our screen, and this is the strategy slightly modified from what Forex Power Pro is to make it easier to automate. Well, we have a 20 period moving average on the median and a 1 period moving average on the close, and RSI period 10 with a 55 and 45 levels. The strategy as is would then mean that when the red line crosses the green in upward direction and RSI is above 55, we would enter a buy trade. And as you can see, that could work quite nicely. But when you backtest this for a while, you find that you get negative results. And so what we did was to add a longer time frame filter. In this case, what I did was to go to indicators, add a moving average, and I've already done so, but it's a 200 period moving average, which is quite a common one to use. Now I'm placing this on the same time frame that I'm trading, but obviously it's a 200 period as opposed to a 20 period moving average that we're using as our main signal for the buys and the sells. So it's equivalent to having a longer time frame. And if we add that, we can see then that, for instance, this buy trade that I just mentioned here would not be taken because currently price is below the 200 period moving average. and therefore you would only consider sells at this stage, and we would take a sell at this point, except that the pip distance probably isn't sufficient. So luckily we wouldn't be triggered, but we would surely have been triggered at this point here, and obviously that would still have been a loss. However, by adding that, we actually do improve the profitability of this strategy quite markedly. Let me just check on something to make sure I am recording. Yes, I am. And I'm showing my screen and I'm not muted. Okay, if you have any questions, do please ask them. I will pause from time to time to check whether I have anything. Okay, so the question is, how can we add it? And if we go to our expert properties and we go to our the menu box or the dialog box of the expert advice of the order trader, then if I scroll you down, I have a module called label 5, which is multi-time frame moving averages. I'm using one of them already for the strategy, but as you can see, I have a time frame 1, which I'm using already, a time frame 2, and a time frame 3. So I have all these options, and what we want to do then is for a time frame, I want to add another time frame filter. So I make that to true. In this case, I want to do it on the 60-minute time frame, so it's 60. Price is the same as a simple moving average of 1. And this one we would make 200, because that's quite a common one that people use for deciding when to buy and when to sell. We can make that a simple normally and apply it to close. And by doing that simple action, I've now added a time frame filter to this particular strategy. So as you see, it's not difficult, but it turns out to be a very useful one. Now, rather than showing you the back testing, what I have done is I've already done some of those tests. And let me see if I can find the one. So let me load the reports. So I should say that I'm now on Strategy Quant Analyzer version 4, which is not a product I'm associated with, but I've bought this particular product, and it allows us to analyze any of our backtest report. Perhaps I should go back one step, and if you've done any backtesting, you would see that you would get a report something like this, where all your conditions are set, and then if you scroll down, you'll get all your basic results in terms of modeling quality, which here is 99.9%, things like the absolute drawdown, the expected payoff, etc., and the chart, and then, of course, all the trades. Now, that's useful information, but to me, that is not as useful as you can get. So once I save that report, I can now load it onto my backtest, and let me find my Forex Power Pro, and I think that's the one that I want. And as we can see, if we did it as we took it straight from the web, then that strategy would be a dismal failure, and we've just made a bit of profit in 2015, but the first 3 years were a hefty loss. If I go to one of my other simulations, so what we might do is what I did was with the 200 one I've just showed you, with a 200 SMA trend and no trailing stop. So if we check that one out, and as you can see, we've already made some progress. We certainly become profitable in 2012, but still not very happy with it, because in 2015, after 6 months, we're flat. We can see that the hours of the day, which is this one, there's only certain sections of the day that this strategy is profitable, and it looks like 3 days, the middle days of the week, it's profitable. So you could set the order trader to not trade on Mondays and Fridays. As I said, this sort of analysis to me is much more, is a bigger enhancement of our backtesting results than if we just looked at the normal backtest report. Let me look at another one. So that was with a trend, and here is one, and we might as well move to this one, which is where I took that same strategy, left the 200 smooth moving average, simple moving average trend in place, but also used an exit rather than just the stop loss and take profit, the hard ones. I used an exit which was based on a strategy that we developed in one of our first few webinars, where we used it to enter a trade. And here I just reverse it to make sure that we exit the trade on that same basis, because this particular one was where we entered a trade on a reverse strategy. So after the trade had peaked, and whereas with the Power Pro strategy, we tending to start at the beginning of a trend, and so it made sense to me to use a setting that would signify the reversal of a trend as an exit part of our strategy. So if we looked at that, and then I also did some scale-ins, which I'll show you how we can do on the order trader. And so this is the one that I'm now most happy with for the Forex Power Pro strategy. As you can see, in 2012, each of the 4 years, we are nicely in profit. 2015, it's only half a year, and we've done really well. And once you've done really well for a while, you think, have the good times passed, and do I need to be careful? So we need to look at that. But that's a much healthier representation. So the same strategy, but having now a dynamic exit, as well as some scale-ins into our positive trades. When we look at this in profit loss by month, it says that over the past 3 years, because we haven't hit August yet in the back testing that I've done, so August has generally been negative, and we might decide on this basis not to trade in August, and maybe not in December and January. And that's not an unreasonable thing to do. This obviously coincides with the European summer period, or the Northern Hemisphere summer period, when market is quieter. And this is our Christmas and January period, which are sometimes periods when EA traders don't want to trade. And that would seem to be borne out by this. This one also indicates that Monday is not generally profitable, but I have tried it without trading on Mondays and really not making much difference. So I'm a little bit dubious about that result. I'm showing you the other one, the profit loss by time, to see that our most profitable trades actually go for quite a long time, because we have left quite a bit of room to breathe for the trades. And so this is 4 days and 8 days and 16 days. So trades can go for a fair while. Now I wanted to show you how we did the scale-ins, because this one is using the dynamic exit for the trend reversal type exit, and it's using 2 scale-ins, one at 5 pips profit and one at 15 pips profit. I should use my little thing here to show you where I am. So scale in at 5 pips and at 15 pips. And if you haven't been able to see it, so this is quite a nice summary. The overall profit factor for the 3.5 years is 1.56. And we've had quite good profit factors for each of those 4 years so far. The wins, as you see, are not high, and that's why getting the right trade settings is important, because you can still, as long as you have a good reward to risk ratio, you can afford to have less than 50% wins. We'd like this higher, but that's not bad. Let me just get rid of this little thing. And why won't that go? Okay, so in order to add scale-ins, we go to our scale-in module, and that's this one here, and we'd enter a lot size. On the standard basis, I started with these, but what we've done with this particular strategy, and I won't go fully into it, is that we've set that, and we've set our profit here, which I think was 120 and 80 or whatever it was. And again, that's all we do for our scale-in. And then scale-ins aren't always triggered, because the trade can reverse as soon as it's been entered, and so we don't want to, sometimes generally want to remove the scale-ins that are left behind, and so we set that to true. But again, that's just a simple adjustment and something we can test for and then use in our trading. Okay, let me go back to my PowerPoint. So we did do the high time frame, and I've shown you now the importance of that, and also having the dynamic exit based on trend reversal, or which a divergence type strategy. Let me show you that one if I can. That was one based on here, where we used some moving averages which were shifted. It's probably not go into that, because if you weren't here 2 weeks ago, that might be a bit confusing. So far we've covered 2 strategies that we've taken from the net and found that we can make them both profitable as long as we do some testing. It led me to think about what indicators do we need to get an entry, and how important is the entry compared to the exit, or to how we take profit and how we take a stop loss. And let me just divert a little bit, and I think I have it on my next one. And let's just think a little bit about strategies and how we optimize and what we should aim for. What I showed you just now was a 3.5-year back test, and generally I would argue that you need at least 3 to 5 years back test data in order to judge a strategy to be profitable. There are lots of people who will only back test for 3 months and find the right settings and then go forward, and perhaps each month do a 3-year back test. I just find that really doesn't work. The market changes too much, and if you have a strategy that's only viable in a 3-month period, it's unlikely to provide long-term results. The other question we need to ask when we develop strategies is, what should we aim for? And I think I've been guilty in the past of aiming too high and hoping for a 5% per annum, a 5% per month winning rate, profitability. And really I certainly haven't been able to achieve it. And the more I read, the more I see people being unable to do so. And those professionals who've been in the game for a long time too. If we can do 1 to 2% a month, which is 10 to 20% per annum, and we can do that with a drawdown of somewhere around 10%, no more than 15%, then we're doing really well. Now, it's not like the things that we often read about, doubling your money in half a year. It just if you can do it, good luck. I think we might do it for a little while, but long term, it is just not a sustainable option. The market just isn't that kind to us. And what I think we need to do is we need to compare the risk to reward that we can get with Forex trading compared to what we can if we place our money with the bank. Now, I think if you're in America, a lot of other countries, you probably won't get much interest, but in Australia, you can still get about 3% per annum interest on a term deposit. And so that's with virtually zero risk. So you'd certainly want to do better than 3 to 5% per annum. So what we're suggesting is that the 10 to 20%, you're getting more than you'll ever get by putting your money in a bank. But you do need to remember that with Forex trading, you are susceptible to drawdowns or to losses as compared to a bank deposit where, unless things really go bad, your money is safe. Sum it all up, I like to go for 20% per annum, which is about a bit under 2% per month, and a drawdown of around about the 10%. In the past, I've really doubled those, but especially if you're running more than one EA strategy on your account, then the drawdowns are cumulative or additive. And if you've got 4 strategies with 20% each drawdown possible, and they happen to be towards the same time, then you're down 80%, and that's rather frightening. The other thing to look at when you do testing is to check the performance, the annual performance. Is it flat or is it rising? And let's have a look at one of these. If we go to our rather good one, we can go to our equity chart. I hope. Here it comes. Okay, that equity chart is not too bad. I can also add the drawdown as a percentage. And there was somewhere I can do time. And we can add a line. And I'm just a bit baffled why this other line has come up. Okay. So in this case, we have a reasonable equity curve in that we've gone from bottom left to top right, and we haven't had a long period of where it's ranging around and not gaining us any money. So obviously there was quite a big drawdown in end of 2013, start of 2014, and in fact that period would have been fairly hard to maintain your indication of this strategy. And this does show to me, and I hope to you, that Forex trading is not a short-term activity, because if you'd given up the ghost at this point here, you would have missed out on the lovely retrieval back to here. And so we do need to be in it for the longer haul. Now, the other one is what I call a robustness test. And once we're happy that we've got something that's 10 to 20% per annum, and that doesn't have too many years. I had a couple of strategies where 2012 and 2013 were essentially flat, and 13 and 14 were where it went up. And you've got to ask, is a strategy worth having like that? Because obviously you could get some more years where it's totally flat. So make that decision. And then we need to see of how sensitive it is. And by that, probably easiest shown on this slide. And I shall make it a bit larger. how we go. Hopefully you can, oops. Let me just get me back to where I want it to be. I didn't want to be there. My problem is that, let me get this out here. Okay. All right, we're back where I was hoping to be. Now, what I mean by robustness is that in this particular instance, what I was looking for was what scale-ins I could take and what settings I should take. And so we can see where I am here. Well, pretty well all of this, the profit. So I've did a total of 12 different runs. The maximum profit was 13,000, minimum was 8,000. Profit factors from 1.39 to 1.26 with the respective payoffs, and the drawdowns varying from 13% to a high of 19%. So not too far off, but I could achieve that with having taking my scaling profit target from 300 to as low as 200, and my stop losses from as low as 10 to a high of 40. And so having these, by varying these parameters, I was still always able to be profitable. And that's one of the things to be aiming for, and that's sometimes shown in the two-dimensional service charts that you can get from Strategy Tester, which replicates this data. And so if there was only one, if this was the only dark spot and everything else was white or very faint green, then we would say this particular strategy is very sensitive to these conditions. The conditions being take profit of 250 and 300, and the stop loss of 30. It has to be between 30 and 40. So we need, once we've settled on a particular strategy, and you tend to do that using quite large steps in your optimization. Once you've got somewhere where you'd like to be, it's useful to do some small steps around that particular set of settings, and just to make sure that you don't go from a profitable to a losing strategy. In this case, all of these are acceptable. I'd be happy if any of these settings, if I had any of these settings, that I'll be making some money. And so I'm essentially happy with that particular process. And that is a way of what I mean by making it robust. Here we have where I've looked at the parameter of the scaling break even and how many pips I would lock. Again, a bit of variation, and essentially profit factors are all still above 1.2. And so again, I'm happy with that as my basic settings for that strategy. The one thing that I sometimes worry about when I've done a back test, as I have done here, is when you get downward move just towards, this is roughly, I think, towards the start of the year, heading into July 2015. Now, there's two ways you can respond to this. You can say, well, maybe this strategy has had its day. It's had a nice long up curve, but it's really going down. Or you can say, overall, this strategy has had a maximum drawdown, I think, of only about 12%. So we've probably had that drawdown here. And so this could actually be a good time to start trading it, because we know it's gone down. If it keeps going down in the first month that we're trading, then we might say let's pause. but if it has come down nicely, in other words, it's on a chart, we would say it's done a pullback, and pullback probably to about the 10% that we've had over the past 3 years. So this would be a good time to actually start using this EA on a live account. So that's about the robustness. The other factor I find in all of these strategies, the entry is best kept very simple, and I'm going to show you that in a minute. And the key aspect about making strategies profitable is the trade management, the level of the take profit, the stop loss, and the trading stop. And in general, the strategies that go on time frames longer than 1 hour seem to perform better than the shorter time frame ones. With that, a bit of a side step on optimization and how we develop our strategies further, I'd like to come back to this point about keeping the entry simple. And what I in fact did, so we've done that. If I go to my next one, which is a Aussie Kiwi strategy, and I'm not going to into it, but all I've got in this strategy is RSI as my indicator, and all the rest is all about the trade management aspect of it. And it's a simple one where RSI moves above a line, it's a buy, and RSI moves below, it's a sell. And if we look at the results for that, which is this one here. Again, we've got a nice equity curve from bottom left to top right, with one flattish period, but not too bad. It's in March, early March. I suppose one could say this is a fairly flat period, but we're going up there. Let's have a look at the overview. And so in 40 months, 6,700. So we've got about 1.5% per month on average. So it's within our desired range. The drawdown is only 8.65%. Can I use this to highlight stuff? So 8.65. And you can look at the other bits for it. We can look at the performance during the months. So January this year has been bad, but the previous has been good. And we can go through April. Looks like to have been a rather bad month for this strategy. And going forward, October, and so on. It's a nice little gadget, this thing, but it is painful. So the other one is to look at the trade analysis. And if I take you, I should use it again here. If we take it to the overall net profit, we can see we've done fairly well at that 1.5 profit factor. Again, the wins fairly low, but what we can see is that it's been profitable each year. It varies during the day. Tuesdays looks to have been a losing day on the whole. As I said, April and October have not been good months, and again, they're fairly long trades. But the other thing that I wanted to show, which I think I can, the number of trades, and that's a crucial one. You can see there are only about 45 trades on average per year. So essentially, in 12, so if it's 46 for the year, So it's about just under one a week, a trade that we get. So it doesn't trade often, but as you can see, we end up with quite a nice result for it. Profits of 6,700 over that 40 months. Now, as I said, all that is a simple use of RSI as a entry, and then it's the management of that entry that determines the profitability. Okay, we've got enough time. I found another strategy in my pile of PDFs, which uses an EMA and an SMA, so a moving average crossover and RSI, and also suggests to use the high time frame filter, which indeed is required. Now, I can show that here quite easily. So the strategy is let me go through it. It's a strategy which involves the 8-period exponential moving average crossing the 26 simple moving average, and RSI above 48 being a buy and below 48 being a sell. So again, very simple. And then they also suggested, that's this white line, that if you're trading on the 1 hour, then you should make sure that the trend is in the right direction on the next higher time frame, which is 4 hours. So again, we use a 200 SMA for that. And here's one other thing that you might find handy. When you're trading on the 1 hour and you're sort of examining the charts at this point, to have a moving average on a higher time frame is awkward because that means you've got to move from one chart to another. But of course, a 200 SMA on the 4-hour chart is equivalent to an 800 SMA on the 1-hour chart, because there are 4 hours in a 4-hour chart. So 4 times 200 is 800. And so in this case, we can put our 800 on this chart, and that's equivalent to having a 200 SMA on a 4-hour chart. And so you can see, now this is a where I've run the strategy already on the visual mode, and we can see that it indeed has taken a sell trade when the red was below the green, and the price was also, and there was a 5 SMA that I have actually crossing, and we were below the 800 SMA on the 1-hour chart or the 200 SMA on the 4-hour chart, and we took our sell trade. Now, as I said, this strategy doesn't trade often, and if I go back, I think I must have missed one. I have, but in any case, I've come across another buy trade, which happened here. As you can see, we've just crossed the 200 SMA on the 4-hour chart, or the 800 SMA on the 1-hour chart. Our RSI is above 48, and the red is above the green, and we've actually taken a 293 pip profit on that trade. So that works quite well, but certainly if I take away this longer term trend filter, then this strategy is no longer profitable. And don't think I did this one in more detail. And let me see, is there anything else I need to say? I don't think so. You can see in here how if you didn't have the longer term moving average as a filter, how you'd be whipsawed in and out of trades using the 8 EMA and the 26 SMA as shown here. So that longer term trend direction is important. It does mean that instead of entering up here and having much longer profit, obviously we have to wait. And that's a decent wait. It's a 150 pip wait before we enter the trade while we're waiting for the longer term trend to have developed. But it's better to have fewer trades and be profitable than have lots of trades and lose a lot of money. Excuse me. Let me just check to see if there are any questions. And I've managed to get rid of my question box again, for which I apologize. So in any case, if you do have a question still, then please feel free to email me and I'll deal with it then. Okay, I think I want to call it quits. I don't think I have one of that particular strategy. Let me have a quick look. Now, as you can see, I've done a lot of different ones, but I don't have that one. So let's not worry about it. I think you've got the gist of it. Again, this strategy, if you wanted to test it out, so it's the 26 simple moving average, the 8 exponential moving average, and the RSI of 48. And then it's a question of optimizing with take profits. Now, there was that one there. For this one here, for those of you who have the Order Trader and who are following the FX for me, this will be maybe next month. I'll have the set file or EA, coded EA for this particular strategy. I think it's quite a nice one. It's a currency pair we haven't used before. It's less erratic than the typical Euro one. And the one other thing that I was interested in showing, which is a useful thing to do, is if you go to the model, instead of doing it at every tick, if you select open prices and then do a visual, and I'm not sure what I've got here, but what I wanted to show you, and let me do the Euro USD. Let's get rid of the grid, and I like to have, okay, we've got I think it's useful from time to time to run through a chart like this and just get a feel for how dynamic currencies are. And also notice, for instance, here we have these gaps which get filled. It's a weekend gap. And one of the strategies I've done earlier in this series is setting up the Order Trader to do weekend gap trades. And you'll find when you watch this that there are a reasonable number of such weekend gaps, and how on the whole they tend to get filled. But this gives you a good feel for how things move. And here we have another gap which didn't get filled. And the results from this should not be trusted, as the MT4 people make stress. But as an initial pass, if you want to do a quick run through, it's quite a useful way to start an optimization run doing this and just seeing what actually happens and how a currency pair fluctuates and what that might tell you about how much room you should give trades to breathe and where you should put your take profits. And yeah, I won't bore you too much longer, but I think it is a useful thing to do. So let's put a stop to that now. Okay, the final thing then for this week, and I've talked about optimization. For the next 10 hours, this package is still available, 2 EAs for the price of 1. But if you're watching the recording, then this particular special will have finished. And I did want to make the point that over the next couple of weeks, I'm getting the EA, the order trader, modified a bit further. We'll now have a dynamic take profit, stop loss, and trading stop settings using ATR and the multiples of ATR. So a dynamic based take profit and stop loss settings. And with that, I'll be testing it. And so that for the next 2 weeks, the EA will be available for its standard price of 197. But come September, the price is going to go up to 297. We've now been in business for over a year, and I've made a lot of advances and a lot of additions to the order trader, including basket management and scale-ins, and now dynamic take profits. And so I'm moving the price up to 297. That's still less than, it's about $20 a month for a year, I guess. So if you want to get the order trader, I would advise you to do that before the end of the month to get it at the price. You'll still get the upgrade for free. So the dynamics take profits, if they're not out by the time you buy it, you will get the upgrade for free if you do buy it before September. But after September, the order trader will be selling for 297. Okay, and if you need to contact me, please do so. I'd love to get some feedback. info@diyforexskills.com. And I think that's all I need to say. I also post regularly on Facebook with this address because I like to do some manual trading as well as order trading. And currently I'm trading the US yen and the US Canadian dollar, the loonie as they call it, which should both be based on longer term support resistance levels and some channel type trading. So I think I repeat my view that we should always trade both manually and on auto. Each has to have their benefits, and I think the manual trading does make us better equipped to develop strategies which we might test and run on the order trader. So next week I'm taking a week off, having a bit of a break and giving my mind, getting my mind off trading. And then on the 29th, we'll have the final webinar in this series. So until then, thank you for watching and good luck with your trading. Bye for now.